Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 16th of December. Yesterday, we broke the daily support on the Nasdaq. We broke also this blue dot line last week low. And if we check the 30-minute chart, momentum is starting to build in to the downside. We broke these three red lines that I have on support, and we are trending down as you can see. And since yesterday, during pre-market, during overnight on the Nasdaq, we've been trading sideways until 3 o'clock, in which UK session started to sell, and right now everything is red. All stocks. Apple is in the red, is gapping down. Amazon 1.05%, and Nvidia 1.38%. So weakness and selling pressure is starting to appear across the board. So what is happening right now? Well, we already know that Jerome Powell said that the cuts, the pivot, are probably not happening in 2023, and we saw yields and 10-year spiking up. And one of the things I mentioned yesterday during my market update is that yield curves are showing discrepancies with what Fed was showing during the plot graphic in the press conference. So terminal rates for Feds are near 5%, and for markets, this is April's, markets are pricing in 4.83%, a little bit lower than the 5.1% more or less that Feds are projecting in the plot rates graph that they showed. So yields are still going up. As you can see, I think this is quite clear that we have a misunderstanding between markets and also the Feds. Feds are projecting higher terminal rates than the markets, and perhaps markets are again being a little bit positive, but in terms of bonds, in terms of yields, but not in terms of value of stocks. Technology is being hit hard. As you can see, we've been on the daily, we've been seeing a lot of rejections, a lot of selling pressure, and right now again gapping down. So this is since the high, we are right now 8% in 3 sessions. So technology is feeling the pain. Also, consumer discretionary is tanking. The US consumer is feeling the pain, is starting to see that things are not going well, economy is sick, and they are cutting spending. And XLY, consumer discretionary, feels the pressure to the downside. XLF, also financials, are feeling a lot of pressure to the downside, since Jerome Powell said that next year is not going to be as markets are predicting, and people are starting to see the fear of recession. They don't want to call recession. That's a bad word for them, but it is what it is. We are most probably in a recession, and people are starting to sell off and take opportunities to the downside. On the Nasdaq, this candle was the previous CPI that we had, and it's at 11,000, more or less 10,900. And right now we are trading at 11,000, more than 300 points above. So I think a movement down here, it's probable. I won't be surprised if we move down there, but we have to take into consideration that today is Quadruple Witching Day. So Quadruple Witching Day is the simultaneous expiration of stock index options, stock options, stock index futures, and single stock futures. Both quadruple 4 expirations at the same time. When is the third Friday of these months, March, June, September, and December? So right now, today, 16th of December, the third Friday of December, today is the last quadruple witching day of 2022. So why do traders care? We are expecting increased volume and a lot of intraday volatility. So for you day traders, today's can be a very good day. Manage your risk and be disciplined, be patient, and you will have a lot of opportunities today. So what kind of levels are we watching? How can this quadruple witching day help us trading today? So this is today's SPI options expirations. The amount is 6 million. So this is trillions of dollars expiring today. And all the most majority of these are written by Wall Street's market makers. So as you can see, we have two big, huge walls of calls at 420 and puts at 380. So what Wall Street wants is just not pay both of them, just be in the middle. This is called max pain. And right now we are seeing 392. So more or less around here between these 390 and 400. So moving the market around here will make the most money to Wall Street because these guys are not going to be paid. So what is right now the stock price? 389. Let's check the market quickly. So we are right now, we are the SPI, we are at 389. SPI is trading 389 and max pain is 392. So only 3 points. So most probably markets will stay around these levels today. Let's check the 5 minute. So most probably markets will stay around here, trading sideways, maybe going down, making some traps, going up, making other traps. But most probably we will stay trading the range in between 390, 380 and 420. Be careful with the traps. Be careful with going short on the lows, going long on the pushes, on the rallies, because it may happen that maybe this max pain is not exact, it's not 392, but don't be naive and think about the amount of options that are expiring today, and Wall Street wants not to pay anything to these guys. This is what they do better. They don't want to pay anything. They want to keep their profits. And in order to do that, they have to keep the markets trading in between these two levels, 390, 392, 395, not 400. So if you are seeing SPI approaching 400, be careful. If you are seeing SPI approaching 385, 380, be careful. But expect a lot of opportunity due to extreme volume and extreme volatility. So I will be watching this, take this into account. This is the best day to watch these options expire, and this is the last day of 2022. So I think this can be helpful for us day traders to find good opportunities and to interpret the markets appropriately. So what else do we have to see? Dollar, I think dollar is, since 2022 we've been following dollar, and it's been helpful, very helpful to find convergences and divergences with the overall market. But right now I think it's not coupled with Nasdaq performance and indexes performance. So that means that dollar going down, I don't think is any more helpful for overall markets to go up, because we are not talking about inflation. We are talking about fear of recessions. So that being said, I'm still watching the dollar. I'm not trading based on that, but for me, I think it's good to keep trending down on the DXY, and I will be focusing more on the yields and on the bonds. TLT and XYG, high yield corporate bonds and treasury bonds, are high yield corporate bonds took a big hit. These are high risk bonds, so being now the fear of recession increasing, I don't think a lot of people are trading high yields. These are high risk assets, so they are risk off on them. But on treasury bonds, treasuries are one of the best assets to trade when yields are being controlled by the Fed, and in terms of recession, they are a low risk investment. So this is why we are seeing this kind of move on the bonds, and continuing seeing these, I think, will be interesting to find opportunities, and I think are worth watching. But be careful if high yield corporate bonds keep going lower and treasuries are going up. Maybe Nasdaq and S&P's overall market will be continued downtrending. And I think that's all. This is the things that I'm watching in terms of levels. Remember, quadruple witching today and 392 max pain. But in terms of technicals, I can see a big move to this pivot at 11,250. I can see markets still continuing lower, maybe to 11,200, and then bouncing off that to find max pain on the S&Ps and trap some short sellers that are looking for a bigger move to the downside. I don't think today is a day to expect big moves to the downside, either down or up. So be careful. Rallies might be met with selling pressure, so don't expect markets to bounce and keep ripping, because the sentiment is not like that. But remember that we have Wall Street pushing the markets to certain levels to expire those big amounts of calls and puts are certain strikes on the options. So what kind of move I expect? I can see, I've seen in the past that they are setting a lot of traps to the downside and also to the upside to trap more traders and try to increase their benefits. But don't get me wrong, anything can happen. Be careful, but for sure expect a lot of volume and a lot of volatility. So right now we lost yesterday's low, as you can see this line, and we are trying to reclaim that level at 11,400. So as long as we trade around these levels, perhaps today it's a good day to find range sideways consolidations in which you can trade the extremes, the top for shorts and the bottoms for longs, and expect a lot of traps and a lot of manipulation into the power hour. That's what I can say. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecasts like this one, market updates at noon, and market recaps after market closes. I appreciate your time and see you in a couple of hours with the market update. Remember, discipline and risk management are super important today and are key for your success. Stay safe, everyone, and see you later.